Hey everyone, welcome back to my channel. It's Ashley, and for those of you guys who are new, welcome, welcome, welcome. I'm so happy that you guys have decided to tune in. Happy New Year's, everybody. I know it's been a minute. I have been dealing with, personal issues, family issues, but I'm still trading. Don't think I'm not. Um, I have had a few videos recorded, and I just never got around to editing them and uploading them. So, we're here. Um, I decided to go ahead and go with a market structure video because I think this is very important, especially to a lot of the traders who trade the similar strategy as me. I notice anything that's technical goes all out the window, with traders, especially when they're learning a new strategy. A strategy is a strategy, but technicals are still technicals, and some of them are extremely valid. And this one is one of the most important ones of all, and that's market structure. So, there's three things that I tell people the market can do: it can go up and down, and it can go sideways. I say that to people all the time, especially to people who are looking to get into trading when they think it's just so complex and then some. Now, don't get me wrong, trading can be very hard. It's as hard as you make it. It's not hard for me. I've put in the time, to sharpen my axe. I have chart vision. I know what's going on. I'm really confident when I enter. So, you know, um, I definitely feel like this is something that a lot of people are not doing. Okay, so the first thing I'm going to talk about is consolidation, or quote unquote a sideways market. Typically, when you have consolidation, this is done on purpose. Okay, typically, this is where your anchors or your peak formations or your start of a trend or a move happen. Okay, these are also what I can consider pullbacks. They're also reversals. They're all the same thing. It just depends on the context of the market. So here we have consolidation against some highs, which the consolidation is considered actually a double top. One, two, just the second leg of the M is it's shorter. It's a double top, and they continue down. So typically when you have a sideways ranging consolidating market, you're looking for a reversal, or a continuation in that trend, and you're looking for some form of trading pattern to get you going in that direction, whether it's a reversal or a continuation. As you can see here, it's a continuation. There, it's a reversal. So basically, here you have the opposite. You have a downtrend, and you have ranging consolidation sideways market against some lows, and that formed a trend change, a peak formation, an anchor, whatever you want to call it, into the opposite direction. So that's one of the things that we have. So in consolidation is where you would look for your patterns to continue in the direction you were already going, or they were going, or you look for the pattern to reverse. That's where you would look for your moves out or in. Okay. One of the main things we definitely need to discuss is the makeup of a downtrend. So in downtrends, you have lower lows formed. You have a lower high. You have a lower low. You have a lower high. You have a lower low, a lower high, and a lower low. What's that saying is a new low is being made, and now they're retracing, looking to retest the previous low, and it's failing, and now they're making a new low. So now you have that new low created. That lower high is retesting that last low. It's failing. A new low is being made. That lower low is pulling back. A new high is being tested, or a lower high, because it's not a higher high. It didn't break all of this. It's being tested and it's failing. So the key is these lower highs are not breaking that main high up here. They're not breaking each other. What they're doing is breaking and retesting the lows. You need to have something broken and retested. Broken, retested, that's retested. Broken, that's a new low. That low is broken. It's retested with that high. It failed. Now this low is being retested, or it's being broken. Now it's being retested with that last high. And so here you see it in the charts. Lower low, lower high, lower low, lower high. This retested that low, it failed. Lower low, lower high, retested that low and it failed. Now here it gets interesting. You have equal highs. You have equal lower highs. Okay? Equal lower highs usually symbolizes a reversal. Okay? So now here you have equal lower highs. It didn't even break that lower high. It retested that low and it failed, made a new lower low, and kept going. So all you have is lower lows and lower highs. You don't have higher highs here or higher lows. You just have lower highs and lower lows, okay? And they're continuing in their downtrend. When you start to get equal lows, then maybe that's when you should probably start to pay attention to a trend change. Now, here, well, we already did the downtrend. We have the uptrend. You have a lower low, lower low, and you have a higher high. You have a higher low, a higher high, a higher low, a higher high, a higher low, and a higher high. So basically, there's the low, and a new high is being made. They broke whatever high was over here. So a new high is being made. They're retesting that last low, and they're failing, and they're making a newer high. They're coming back, retesting that last high, and they're failing to break it. They're not going below it, so it's rejecting. It's going higher. Now they're coming back, retesting that last high. It's rejecting. It's going higher. You know what I'm saying? So you're looking for a new high to be made, the last one to be retested, and it's not breaking, it's holding. They're pushing higher. New high made. They're going to retest that last high. It's not breaking, it's rejecting. They're going higher. Now they're going to go ahead and test that old high. Rejection. New high is being made. Okay? Seeing it here. You have that equal low. You have higher low. Higher low. Well, this would still be the same to me, but it's a higher low. Higher high being made. They're coming back, retesting that old high. Coming nowhere near it. Making a new high. They're bringing that higher low back into that range of that old high. It's holding. New high is being made. Bringing that high into that old high. That low into that old high. It's holding. New high is being made. They're taking that low into that old high. It's holding. New high is being made. Taking that old low, the new low into the old high. It's holding. That's that range. And they're going. So basically, when you have, let's just say if this was here, equal higher lows, obviously that's going to reject as well. It's rejecting that low. So basically, in so many words, people are not paying attention to market structure. They're just like, oh, I'm trading these patterns and these entries, and I'm not paying attention to market structure. I'm not paying attention to the direction, when this stuff very much so matters, you know? So when I'm in an uptrend and I see equal lows, you know, that's okay. But when I'm in an uptrend and I see a reversal coming in, that's when you should be paying attention to what's going on, you know? Most people don't understand that. When I'm in downtrend and I see the lows coming in, you know, you got to pay attention to those, because you're paying attention to if the lows are being broken and retested, or if they're holding. And you're paying attention in the uptrend if the highs are being broken and retested, or if they're holding. So a lot of people don't pay attention to that, and they don't understand, you know, why they're not getting the direction correctly, or, you know, or I'm in this level or that level where I entered on this pattern and that pattern and this bounce and that bounce and all this kind of stuff. And it's like, but you're not paying attention to market structure, you know? So I hope this video has given you some insight on something that you really should be paying attention to No matter what strategy that you're trading. I trade institutional, so this is something that I really pay attention to. I'm looking for these to be created, and I'm looking for them to hold, or I'm looking to be, for them to be broken and retested. So, once again, I'm gonna be dropping some new things soon, and I like to keep my videos under 10 minutes to get straight to the point. Um, it's up to you to back test it and put in the work and go from there. So if you're not, make sure you join my Telegram channel and my Discord channel, and follow me on Instagram. I'm obviously way more social on those things than anything. I try to combine everything. So I definitely ask questions of what you guys are looking for, what you're having trouble with, or I have some pretty great guys and gals in my groups who um, give great feedback. Who some of them have been through a mentorship with me as well, and that's still on the way. Yeah, so I hope this video has enlightened a lot of you guys with what you're doing wrong, or even if what you're doing right. Don't forget to drop a comment below, like and subscribe. Thank you so much for tuning in, and Happy New Year's.